Hey there, my name is Zach Young. Thank you so much for checking out the channel, and I wanted to explain to you guys basically what is open enrollment, because right now we are in the middle of open enrollment. And so what is that? Well, I'm going to explain here. Stick around. So what is open enrollment? Well, open enrollment is the time of year in which you can shop all public and private policies available in the state. And so right now we are in open enrollment, and that starts November 1st and it ends December 15th. So I'm gonna explain what you need to do in this period of time. By the way, my name is Zach Young, and of course I'm an independent licensed advisor, so I have access to all public and private policies in the state. My job, just to shop around all of them for you. So if you guys want more information, feel free to reach out down below. I'll be happy to send you over the full range of quotes in your state. All right, so now that we're in open enrollment, we look at the government plans, we look at the private plans. What do we look for, Zach? What should we be shopping for? What to remember? First things first, government policies are based off income, private policies are based off health. So to go for government policies first, how it works, it's a projection of your household income for 2022. So you're gonna plug in to healthcare.gov, Health Sherpa, whatever website that you wanna use, and you wanna actually plug in and say, this is how much I expect to make for 2022. Now remember, these are two important things. First, it's based off gross income, not net income. So if you have an S Corp or an LLC, and even if you pay yourself a salary, they're gonna take the entire amount of that S Corp or LLC, your gross income, so before taxes, write-offs, or deductions. Now, there is a way around that. That's with a C Corp. We can do that in another video. But the other thing to remember is it's a projection of gross income. So what does that mean? Well, if I say, hey, Zach, I think I'm going to project $60,000 for the year. Great. You might or may not qualify for a subsidy. You're right there on the teeter point, depending on the zip code that you're in, because it is based off the average zip code income for that area, right? But remember this, if let's say you say, hey, Zach, I'm gonna make $30,000 for the year, well, now you will probably qualify for a subsidy. The issue is this, if you actually make $60,000, the difference in that subsidy, the amount of premium that the government is going to pay towards your monthly premium is going to be owed back at the end of the year as a lump sum amount. So if you have a fluctuating income, I always tell people highball it just a little bit, so of course you don't have any big surprise bills due back at the end of the year. Now you're probably asking, what are those income limits? And I do want to be honest with you, it rapidly does change based off the zip code that you're in, because it's the average zip code income for that area, right? So do keep in mind the numbers I'm going to throw out here, of course, these are averages, okay? But how it works is if you're a family of one, it averages about 50 to 65,000. If you're a family of two, it's about 75,000 to 85,000. If you're a family of three, it's about 95,000 to 105,000. Family of four, 150,000. You get the picture, so on and so forth, okay? So these income ranges can range a lot. These are averages that I'm giving you here. So you really want to reach out to a licensed professional like myself, and of course I'll give you the exact amount that's available in your zip code. Now, you might be asking, well, Zach, what happens if I make too much for the government subsidy? Does that mean I can't get government plans? No, you can still enroll in the government plans. However, without a subsidy, I do want to be honest with you, they are going to be a little bit more expensive of all the other options that you have available in your state. The reason why, keep in mind, is that on government plans, since they're based off income, right, you're inherently going to have more unhealthy people on those policies. And the average person on the government plan is going to file about $60,000 a year in medical claims per person. Now that's not everybody, right? But there is some people that file $5 million a year, some people that file $2,000 a year, right? But they take the average, and keep in mind, that's why the premiums and deductibles reflect that. So if you have a low income, you can actually qualify for a good subsidy, and it will help your monthly premium tremendously, and they really are the Affordable Care Act. They're gonna be the most affordable premiums that you can find. If you don't qualify for, I do wanna be upfront, they are gonna be the most expensive. All right, so you might be asking, Zach, do I have any other options besides, of course, government plans, especially if I'm healthy, maybe I don't qualify for the subsidy, or I just don't want to pay pretty high deductibles? And you do. So those options, of course, are going to be on the private. Now, do keep in mind there's different private plans out there, but for state qualified private plans, you do actually have to be healthy enough to be qualified for those plans. And when I say healthy enough, I just mean the eyes of the insurance, obviously not myself. And of course, with the insurance, they don't like things, to be honest, like diabetes, heart attack, cancer, probably maternity, or like drug and alcohol. Okay. If it's outside of that, more likely than not, it's going to be okay. If it is, of course, inside of that, there's usually going to be limitations or waiting periods. And so I have recommended those policies even to those people that may have those things, but only if, of course, they're okay with those exclusions and limitations. However, if you don't have that, do keep in mind, they can be a very good alternative for you, low premiums and lower deductibles, because obviously the people that are on those plans are healthier. So they file a lot less in insurance claims, so therefore they get a better rate, just like a good driver discount. Now you might be asking, Zach, what insurance do you have? And I want to be fully transparent. At the end of the day, I make too much for the government subsidy and I am healthy. So personally, I went private, but that's not a one size fits all. it's a different situation for every single person. So if you want to have the full range of quotes sent to you directly, just go ahead, shoot me a message or comment down below. Of course, me or somebody from my team is going to reach out to you. We're going to send you the full range of quotes in the state and hopefully help you make the best decision possible during your open enrollment period. Hope you guys have a great day. If you have any questions, leave a comment down below. If you want to see more videos on possibly how to shop for insurance, specific scenarios like how to shop when you have employer coverage or whatever, feel free to let me know down below. I'd be happy to record a video and make it on there. Hope you guys have a great open enrollment. Talk to you then. Thanks. Bye-bye.